I have Sharon Carlson right next to me and Sherry Madras, who is co-hosting with us today. I've told them no pressure. They do not need to say anything, but I anticipate that they're going to have maybe a few things to say, especially Sharon. We had a great morning chatting and talking about all things procedural and pain points and success stories. And I saw a lot of really good things in action here. And so just want to say thank you to them for hosting. This was Sharon Carlson's recommendation. Our guest today is Ryan Felker from Secura. And so Sharon, I brought a FUA Stanley for her, and I have another one with everybody's name in it. I'm entering everybody's name in it as we go along here today. So we'll draw for that at the end of today's session. I see a few new names and faces, one being Lisa that just walked out of Aaron Huber's square there. So just want to say thank you to everybody for taking time out of their day to join us. I really appreciate it. And very, very excited to be talking all things farm today. I'm going to introduce Mr. Jim Hickey, who is Director of Property and Casualty at the state office in St. Paul. And Jim, take a few minutes if you have any announcements or anything that's top of mind that you have a great audience here of our support staff, quite a few people. And then maybe just give us a little insight into Mr. Ryan Felker before we unleash everybody on him.
Ryan needs no introduction, so
be gentle, Jim.
He's one of a kind. Broke the mold. So thanks everybody. Thanks for joining. I think almost everybody, although we're getting a lot of new names, and I haven't been out as much. So there's a couple out there that are new to me. So Jim Hickey, I run the farm department, personalized department. Recently had commercial thrown on me here the last 15 days or so. So wading through that one, but hopefully it can be a resource for you guys. Most of you know me and have used us to some degree here between myself, Danielle, Roberta. Hoping to, this was Sharon's recommendation, which I thought was a great one. We did this kind of on personal lines last month a little bit. And then Sharon thought it'd be, she asked us if this would be a good thing to kind of go over the underwriting side on the farm lines, which of course, I was all over that because that's my background. So farm underwriter. So, and I thought it would be great to get a perspective from the underwriting side. Like we only see the agent side, the sales side. And there's a whole nother side to what you're submitting and a whole nother process behind that scenes, both on new business, renewals that can probably make your life easier, make your client's life easier, make the underwriter's life easier with communication and just some of the things that were, I mean, I used to get it too. It's like, why are they asking for that? Or why am I asking for this, and to explain those away, where you just have a whole nother perspective. So anyway, with that, I thought who better to invite than our number one writer of farms in the agency. And our number one guy on that farm side is Ryan Felker. I'm sure Ryan, you're probably looking at names, probably worked with some or most, I'm guessing, but some sort of contact?
Yeah, absolutely. It looks like as I was scrolling through, I recognize most of the names that are on here. So I'll take it over, Jim, unless there's anything else you'd like to kick off before I get started.
No, other than, Ryan is such a huge resource for us. He is a instrumental part of the success we've had with Secura. Phenomenal growth. A phenomenal loss ratio. And one of the things about Ryan, we went through some difficult times with Secura, as we did with other farm carriers, nothing out of the ordinary there other than some retraction of lines and cleaning up some business that probably needed to be cleaned up for sure. And rate increases the last couple of years and coverage reductions that, we've all been through and had to kind of communicate to our insureds. And through it all, like Ryan's just got this unique ability, which is rare in most underwriters, that just can communicate. They don't get upset. They just kind of a straight, what you see is what you get, right? Just that calming personality. So, and I consider him a master negotiator, actually. So some of the emails I get from him about hey, I need to take action on this, and this is what I'm thinking. It's kind of like going back into my days. It's like he's almost in my brain, which kind of scares me because usually I just send an email that says totally agree. So, so with that, Ryan, couple sentences on your own, so they already know you're a Wisconsin sports fan, so we don't need to discuss that. But anything else you want to go, and then it's yours.
No, well, thank you very much for the kind words. Thank you, Robin, for coordinating this, and Jim for the introduction. So as Jim had alluded to, I've been in the farm underwriting role, now for a little over 5 years with Secure. And prior to that, I was in claims for about 10 years. I started out at Secura as a property claims adjuster, worked my way up to senior property adjuster, and then I actually managed the inside property team. And I had about, I don't know, at that time, maybe 20 to 25 years left in the tank. So I went up to Garth, who is now our president. He was actually the head of HR at the time. And I said, Garth, claims isn't necessarily where I want to spend the next 20 to 25 years of my career. So what else do we have available? And he thought the perfect opportunity for me would be in underwriting. So fast forward, here we are. And it's been nothing but a great experience. And, you know, I like to leverage my prior claims experience in the underwriting role. So that's been hugely advantageous for me and for my agents to help understand the policy and write the appropriate coverages. So one thing that I wanted to just bring to your attention, if for whatever reason I do get disconnected here, we've been having some issues with our Citrix program. Just hold tight. I'll log back in from my phone and we should be able to continue. It'll only take a minute or two, but hopefully that's not the case.
Well, Ryan,
yeah.
Since you're in Jim's brain and maybe Jim's in your brain, we'll just have Jim impersonate you if need be.
Yeah.
Just momentarily.
Hey, no worries. I'm sure you could actually. You do a pretty good job.
We just got to clean the Green Bay Packers out of that head for some reason, and the Milwaukee Brewers. I could probably purge that pretty quick. So
I'm sure you could. So it's my understanding, Robin, you had sent out all of the resources that I had sent over your way. It looks like all those attachments came through. What I would like to point out is that if anyone has any questions as I'm going along, feel free to interject. I like to take the approach of asking questions while I'm going over a topic versus waiting until the end, which you may do as well. But well, it's fresh in everyone's mind. It may be easier to ask a question right away and make sure everyone's on the same page as far as understanding. So without further ado, let's dive in. The first thing that I would like to go over is our upcoming 4/1 rate change. And your agency offices will receive notice here shortly regarding that change. The real impact to the farm space is with UTVs. You'll notice that when that notice does come out, we're no longer able to blanket UTVs. And why that is we're looking to schedule those individually for the respective limits and coverages. And you'll notice, not to fast forward too much, but with our UTVs, we're actually bumping those up to $1,000 deductibles from a coverage perspective. And the reason why is the losses that we've seen associated with these. They're rated for higher speeds, and we've been seeing some increases in losses with those particular units. The ATVs are still okay. We can write those at $250, $500 deductibles. It's just the UTVs that we're taking more of a stance on.
nothing like starting out great with a rate increase on April 1st, right? Like get the
bad news out of the way,
right?
Yeah. We try to get the bad news out of the way and make it fluffy from here on out.
Just a quick word on the UTVs. What Secure is doing is probably a little bit behind most carriers. Most carriers have never really allowed ATVs, UTVs on the blanket to begin with. They were always scheduled, mainly because an ISO form, which Secura uses their own proprietary for the most part, has an exclusion for motorized recreational vehicles. So you'd have to modify that. So most of them want them scheduled. That's on the blanket. So most of them required them to be scheduled. So we're also seeing a couple of our farm carriers now are no longer insuring UTVs, period, at all on the farm policy. So particularly by model like the Razors, because what we're finding is that's really not a farm vehicle and the rates aren't adequate and it's killing the loss ratios on the farm. So my stance, my messaging has been for the last couple of years, get those off the farm policy unless they're truly used like a farm tractor and they're only used on that farm premises, I would take those things to Progressive. So they got the coverage, they got the good rate. The farm carriers don't care because they don't want them anyway. So that would be our message. But what the action being taken there is probably just kind of catching up with most of our farm carriers.
Yeah, just to reiterate what Jim said there, you're actually going to find lower rates with a Progressive, and our umbrella will actually extend over those. That's often a question that we get, so no concerns there. And I'll touch upon this later too, but if it is going over to a Progressive or any other underlying carrier, we just need to ensure that the underlying limits meet our reinsurer's requirement of 500 CSL or 500 at a minimum to avoid a gap in coverage with the umbrella. So we'll dive into the farm portion first. So we'll look at new business, kind of working our way through FarmLink and how that works. Most of you are pretty familiar with that. I know there are some newer members here that may not be nearly as familiar with FarmLink, but it is very, I don't want to say very easy, but it's very user-friendly, if you will. So you just kind of work along the tabs and enter the information into there. One thing that I would like to point out, and you might receive some questions or have questions for me regarding different zones. I know I've had that come up in the past, wondering why we're applying a percentage deductible or a flat wind hail deductible. Our reinsurer has actually provided us with a map breaking the state of Minnesota down into zones. So if you look at it horizontally, if you will, the southern half, the middle portion of the state, the northern half, the bottom being zone 1, the middle being zone 2, and the top half, or the top third, excuse me, being zone 3. And that will dictate to us, based upon the frequency for weather losses and just the susceptibility of storm damage, how we rate a policy. So anything that's rated in a zone 1, you're likely going to see a higher wind hail deductible, at least a 1% equivalent on a dwelling and or outbuildings. And from there, you could also see percentage deductibles applied depending upon whether or not there's prior loss history that's storm or weather related. And as you go further north, there's less susceptibility for weather damage or storm damage, at least for now. So I can share that map with you just so you see a breakdown of it. But to get a general idea, when you're rating a policy, on the very first general tab within FarmLink, when you enter the county where the risk is located, it will automatically put that zone number in there. So you'll have an idea of what to expect as far as deductibles. You can submit that with, flat deductibles, whatever the case might be. And then once you submit it to me, I can take a look and adjust it as necessary. The next thing that I wanted to talk about was cosmetic. That's kind of been a hot topic. So zone 1, you'll see we don't even allow cosmetic any longer in zone 1. Again, that's where we have higher susceptibility for weather. And with renewals, you'll notice too that there's larger rate increases tied to that coverage. And that's not to say that when you're in FarmLink, you'll still see that it's something that you can actually trigger in there and apply. But if that zone 1 comes through and that's selected on there, I would take it off. Are there any questions regarding the actual cosmetic piece of it? Go ahead, Jim.
So, yeah, I was just going to do a clarification because we got some new people on here, whatever, different levels of knowledge. Cosmetic damage exclusions have become prevalent in the industry, the farm industry, personal lines industry, migrating over to commercial to some degree as well. What that does is it's basically an exclusion that says we're not going to cover for hail damage if the damage is appearance only. Like I got the little dings, it doesn't look great, kind of mars up the surfaces, but it actually didn't affect functionality of the roof and or siding, so to speak, with some carriers. So it's an exclusion that says you're on your own if it's appearance damage. Secura offers a buyback on replacement cost buildings and the dwelling. So you can buy the coverage back so you don't have the exclusion. This gets a little complicated because every farm carrier does this differently. Got a farm carrier out there that puts a discount if you take it, but they're forcing it on everybody. We have a number of carriers that are saying no buyback whatsoever. It's on. every building, period, automatically. So Secure is one of that still has a little flexibility in that. From my viewpoint, the cost is getting up there, which it should, because there's been so many of these claims over the years, which kind of help put us in the issues we've been having with profitability. So, but just so everyone's clear, functionality of the roof, it's a pretty tight endorsement. It's you better have leakage or a hole in that roof in order for the exclusion not to apply. It's a pretty tough endorsement from a consumer standpoint. So the best advice I can give is have the conversation with the consumers up front, your customers. Just say, hey, cosmetic applies to this building. If you want to buy out, we may have an option in some zones, in some cases. I mean, if we've already been pounded with hail, we're not going to do a buyout on that building. I mean, we just shouldn't even be submitting that. So, but there is a little flexibility with some insured cases based on location, based on history, based on maybe they got a really nice brand new pole shed, machine shed that matches the house that I would want that fixed to, you know, that you could buy your way out of some of that. So there you go, Ryan.
Yeah, thanks for the update and the explanation there too. And one thing that I want to further clarify is that the cosmetic endorsement actually only applies to buildings that have replacement cost coverage. If you have a building that's at ACV, the coverage does not apply. So one thing just to be mindful of for those that do have the coverage on there currently, something again, just to be aware of. And the other question that we get from time to time too is if this is something that we can put on a per building. It's not. It's on all or none as far as all buildings are concerned. Hopefully that helps distinguish between the two a little bit more as well. One other thing that becomes a hot topic, especially with new business, is special costs or special perils versus extended perils on outbuildings. One thing that I would recommend when entering a quote is ensuring that you put special coverage on grain bins. And the reason why I say that is that it covers implosion losses. So without that, if you have extended perils or base perils only, there's no coverage for that loss. And if everyone's familiar with the implosion losses, that's essentially when you have that gap inside of the grain bin, and when it's really cold outside and they're drying these things, and they literally concave like a soda can, if you will. And it happens far too often. You see a lot of those claims, and if they don't have that on there, that's a pretty big out-of-pocket expense for an insured to incur without that special coverage. And then the other thing is with premium savings too. You'll notice a lot on renewals. Special coverage is one of those that has gone up. We've had our actuaries look at a few different select coverages. Special coverage, replacement cost, guaranteed replacement cost are just a few where you'll see increases at renewal. And those are often conversations that I have with agents directly if they're looking for premium savings. So if you have, for example, a shed and they're looking to save some money and they might have special coverage on there, it might be worthwhile to go down to extend, because truly most insureds are looking for the coverage for fire, wind, lightning, all the base perils that are out there. Our extended perils package will actually cover collapse. The only difference that I want to point out between extended perils and special perils on an actual outbuilding is if there's a partial collapse, special coverage will cover that partial collapse loss. Extended perils requires the entire building to go down due to collapse. So that's the key differentiator there from Secura's standpoint. Are there any questions regarding special and extended? Because I know that often comes up. Most agents like to see special on there just so they're covered for all risks subject to the exclusions. But again, it's just something worthwhile having conversations with policyholders if they're looking to save a little bit of premium. All right. Moving on, we'll look at, or I'll talk about endorsements next. When looking at endorsements, when I receive endorsements on a farm policy, I might get a request that says, please add a dwelling at location 1 for X amount. And you'll often get an email back from me right away saying, well, please confirm, is it owner occupied, tenant occupied? What kind of coverages are they looking to put on their values? But point that I want to get at is we're looking for the replacement cost estimator in addition to photos. So if you can get that information up front, we can process that endorsement right away. Otherwise, you'll likely get that response from me saying, hey, please submit XYZ, the missing information. And that just, we don't want to delay those things any longer than necessary as far as processing, but photos and the RCEs on dwellings especially are imperative. The same thing when we're looking at updating blanket limits. If we have large increases or decreases, please provide an updated blanket as well. We like to ensure, in most cases, up to the 100% value, just to make sure that we have true coverage offerings in the event of a catastrophic loss. You're not penalized, however. A lot of times I'll see blankets come through with an 80% or 90% limit. Just something to be mindful of. We're okay with that figure. And we know, especially in larger farms, these blanket values can fluctuate regularly, and it is a true blanket. So just because an item isn't listed on the actual blanket inventory form doesn't mean coverage won't be afforded in the event of a loss. It's just to help us get a true understanding of our exposure. And then regarding, just to backtrack a little bit here too with the new business piece, I know there were questions about RCEs for a while. Most of you should be aware or are aware now that Verisk 360 is our provider. So when we do request those replacement cost estimators, you do have that resource available. Hopefully most of you are familiar with Agent Link, how to access Agent Link. Hopefully somebody within the office has access, in your particular agent's office, I should say, access to Agent Link where you can download essentially all of the information that I had shared with Robin. And then also just a quick caveat there that if you do have any issues with FarmLink, often what happens there is you need to re-download. So you can go on there, delete the current desktop icon that you have, and then download another copy of FarmLink. And that usually alleviates all of the headaches associated with the error messages that you might be obtaining. But you can find things like the billing information that I had sent over, the EFT information, copies of the blanket inventory, a lot of our forms that are available to you. So there's, again, a wide variety of information that's available at your fingertips there. And then when submitting new business, one thing that I would like, hopefully it's easier for you as well. I know that there are some agencies that will submit photos, loss runs, diagrams. They'll upload that right into FarmLink. And I honestly don't know how much of a hassle that is on your end, but it's actually easier if you just email it over to me directly. So it's easier to likely email directly to me versus uploading, because then I have to go through and download each one individually. And it's kind of a cumbersome process, which I'm assuming it is the same for you on your end too. So just something I wanted to point out to hopefully make your lives easier too. Either way is fine. If we can still do it if it is easier for you, but just something, because I would say 90% of our agents will send them directly via email. And again, I'm just hoping it's an easier process for everyone.
So let's just have a quick best practices discussion here. Because this one tends to become a point of contention at claims time. Kind of this whole story Ryan just talked about. We kind of ran into this with Farmers Mutual Hail when they were pulling out, right? If some of you were probably involved with this, but Farmers Mutual Hail physically inspected pretty much every risk. We kind of relied on them to do the photos, the RCEs, because it was what they did, right? It was in their system. So when Farmers Mutual Hail pulled out, had a number of agents is like, oh, I don't have photos, I don't have RCEs and whatnot. Really, we should have that at our fingertips in our agency management system. Just for the simple fact, if you have to remarket, move accounts, you've got all the information, at least something to work off to give that new underwriter, to give them a picture of that farm, right? Like, what's this look like? What's the history? We can't get access to the Farmers Mutual Hail system now. So if you guys didn't pull all that information off, particularly loss runs, that system's shut down. I don't know what the process is to get it, but I sent a number of notes out that you probably should pull those for your insured. So, but we really kind of found the importance of having this in our files versus relying on the carrier's files, because things happen. So from a best practice standpoint, I think we should have diagrams, photos, any supplemental apps, RCEs at our fingertips outside of the carrier system. Makes life easier for you, makes life easier for us. Where it really comes to point is claims time.
Mhm.
I can't tell you as an underwriter, when I sat in Ryan's chair, how many agents would call me and say, hey, which building do I have insured? Because we call it a pole shed, a machine shed, a storage shed. If you don't have a great map that lines up, particularly with like Google Maps, numbering those for the deck sheet, I mean, that's the best practice, right? Like, I can pull a couple of farms I've been involved with. We print off the Google Maps for that location and we number them to the deck page of how those buildings are listed and NI on the ones that aren't. And the insured gets a copy of that in a booklet. I mean, that's just ideal so that when they call up and say, hey, I had a tool shed go down, is it insured or is it not insured? We ran into so much of this on 2022 claims, right when we were kind of moving business and agents didn't know. They just didn't know what was insured out there. A lot of them did, but it's a huge issue. So the more data that you have at your fingertips on these farm accounts, and the other thing is farmers are notorious for buying things and selling, particularly buying and not telling you. So when we get to that blanket, everybody should have a blanket on a spreadsheet. We've got forms on SharePoint, something that you can update regularly, especially your larger farms, because they're just notorious for not telling you, right? And with Secura, it's a little more flexible. Most of our carriers have an 80% co-insurance on a blanket, meaning you better have that thing insured to value. I mean, I like 100%, takes all the gray area out of it. But on a really large blanket spread across numerous locations, there's probably a little game and a savings to be played there if you have an 80% co-insurance. But if they buy a $700,000 combine, they could easily run out of that little gap, that little kind of favor that they do for us on that on equipment with that blanket. So these are just the documents I think we should really start. If you don't have them, start data, at least going forward, new business, get those in the agency management system so they're at our fingertips. There you go, Ryan.
Yeah, no, that's a really good segue to that new business checklist that I had sent over as well, which was part of the attachment. In there, it does a good job of outlining what exactly Secura is looking for on new business. And again, I think most of you are familiar with what my requirements are. The main ones obviously being the replacement cost estimators for dwellings. We do not require those on outbuildings, just to confirm. It's always nice to have those. It alleviates a lot of the questions down the road, as Jim had alluded to. Photos obviously are a key one, loss runs, and then the blanket inventories. Those are the four big ones that we require for every new risk. And then as Jim also alluded to, what we like to see on those larger risks are those diagrams. And exactly to his point, so when there is a loss, it makes life easier for that claim rep when they go out there, especially if there are multiple buildings at one location. It helps know exactly which building is impacted. And then they don't have to contact underwriting, and then I have to contact the agent and then find out which one exactly it is, or, is it insured or is it not? We don't want to be caught in that situation where, well, it should have been, but it wasn't listed. So it's nice to have that checklist to go through and just make sure that the file is buttoned up before it's, submitted to me to bind and issue out. So perfect. So one thing that I wanted to go over to regarding those coverages that we're increasing to, you'll notice with the dwellings where we have the increased replacement cost coverage. Some refer to it as guaranteed replacement cost. That one is going up as well. And I wanted to highlight that coverage, and it's a good time to talk about it because with replacement cost estimators, we require that the dwelling be insured to 100% value to ensure that that coverage be afforded. So, we have IPI, our third-party vendor, go out there to assess or look at risks. And they'll send back their reports and their diagrams, and they'll run a replacement cost estimator themselves. And sometimes it's lower than what we have insured, the dwelling insured for. It could be higher. And if there is guaranteed replacement cost on that dwelling, I'll reach out and ask the agency to run an updated RCE. And granted, the software that they use could be totally different. And it just helps us gauge an idea of what the actual cost is. But for us to have that guaranteed replacement cost on there. Just a reminder, we need to be insured 100% to value to keep that on there. Are there any questions on FarmLink, on dwelling coverages, new business submissions, anything along those lines? I think hopefully everybody's fairly familiar with our appetite, knows that we've exited the hog and poultry market. One question that I do get from time to time is whether or not we'll write equine risks. And we will. And what I mean by that is we'll write the exposures where there are pleasure use horses. We are not a market for boarding. If there's any association or affiliation, I should say, with horse racing, anything like that, we're just not a market for those types of risks. It's truly just a pleasure use. 5 is generally our rule of thumb as far as what we're comfortable insuring. We have some risks that might have up to 15. We take it on a case-by-case basis, and we review each risk based on its own merits. So if you do have a risk where it's questionable, by all means, reach out to me. I'll be more than happy to go over it with you and determine whether or not it fits within our appetite. All right, so regarding the new business, I think we've gone over most of the high-level items. Renewals are a topic where the altered terms come into play that Jim touched upon earlier with the coverage changes. Most of that is in the rear view. And while I say most, it's because there are some buildings that may warrant ACV versus RC consideration based upon the age. Most are aware that we do take a stance of 20 years or older where we apply ACV to outbuildings. And there are some risks where we might make exceptions. We just ask that photos be sent in for any consideration. One key thing that I want to point out with our ACV coverage, and this is me putting my claims hat back on, is Secura doesn't apply straight line depreciation. And what that means is we don't look at a chart and say the building is 20 years old, it has a life expectancy of 40 years, so we're just going to arbitrarily apply a 50% depreciation. We look at that condition prior to the loss, and we apply depreciation accordingly. And as Larry Wright, our director of claims, would say, we're on the generous side of fair when it comes to applying depreciation, and I can agree with that. It's one of those things where we are generally looking out for the insured's best interest when it comes to claim settlements. So just something to be mindful of. Are there any questions regarding depreciation, the altered terms piece? We've gone over some of the other things that we do as far as applying the $1,000 deductible to UTVs. That's usually the biggest one that you see is the removal of cosmetic, but RC down to ACV is usually the reason why most of those altered terms letters get sent out. Okay.
Ryan, can you just touch real quick? You attached a questionnaire in your packet here, but just real quick, a stance on wood burning devices, outdoor,
with the questionnaire.
outdoor, indoor in a machine shed. You know, what do you look for? What's the deal breakers?
Deal breakers, you know, are when you have an indoor wood burning unit in an outbuilding, if they're not vented properly, or the clearance portion of it. So we look to make sure there's adequate clearance, double walled. And that's why it's all outlined in that questionnaire. A lot of the information is, but when you have wood standing right next to the actual wood burning stove, or there's other combustibles right next to it, we decline those. Too much of a risk, obviously. There's been more of an emphasis on saying no to risks that have interior wood burners in outbuildings, but truth be told, there's so many of them that have those. We just try to send gentle reminders to say, hey, make sure that they do follow protocol and they are up to code. That's a huge portion of it. Just ensuring that they're up to code is the big deal. I mean, that goes without saying. Good question. Okay. If there's no questions on any of the actual farm new submissions, we can touch base on the auto, dive into that piece.
Brian, before you move on, what comes to mind is to ask you the elephant in the room question. As an underwriter, what are some of your bugaboos on new business, new submission, things that you run into on a regular basis with your agency force? I'm sure not in our agency, but things that we, may want to just clean up our act or be mindful of to make your job easier.
To be honest with you, it's just getting those underwriting supports to me up front. The photos, the loss runs, especially if they're looking for credit consideration. Those are the two big ones that I look for. And now that I handle just strictly Farmers Union, I will say that it's been great working with all the agents because they do a really good job of getting me that information up front. It's kind of like we know what's expected of one another. So those are the two big things. And, same thing. And that's why I touched upon it too with the endorsements. It's more of a reminder just to avoid delaying processing those endorsements. If we can get that information up front, Good question though. Does anyone else have any questions on the farm side before we move on?
I think everyone's taking a nap because after lunch or something, or it's cold outside. Hypothermia setting.
Yeah.
They're all pretty quiet. So
we have a question in the Katna's conference room. Oh, you're muted.
Did that fix it?
Yep.
that did.
Okay, it's Nicole. I was wondering, and this, maybe you don't even have an answer for this, but is there ever going to be a time where we will be able to go in and make our own changes?
Regarding what type of changes?
Like farm changes on FarmLink. Is that ever going to turn into a system where we can make our own changes?
You can actually, that's a really good question. For example, say we're going back and forth with things, or you have a quote that you've submitted to me for review, and I say everything looks good. You can actually go back into FarmLink and make changes until it's submitted as new business. Because I can ultimately go through there and make any changes as needed before it finally goes through for issuance. So that's actually a really good topic to bring up, because I often get questions and, well, what if we increase the deductibles to 5,000 versus 1,000? You can actually go in there and change those right away and see what that price would be. And then I don't know how many of you are familiar with the rate icon. When you actually go to rate a policy to see what the premium is, you can go through and click, once you go into the screen, what the breakdown is per building, the price. So you can compare what it would be when you have, say, for example, if you want to quote the difference between adding special coverage to an outbuilding versus extended perils. It will show that breakdown right in there live. So you can see that rated out just for comparison purposes to determine what you want to present to a prospective insured. So that is a really good question.
But just to follow up on that, Ryan, probably where they're going is like existing policies, submitting endorsement changes, coverage changes. That's probably where we're heading on that one.
Okay, yeah, and that was with the endorsement piece of it. Once FarmLink is submitted as new business, changes can't be made in there. It's essentially dead in the water. We don't have anything in the works right now as far as doing any live updates. So that all still has to come through our processing team or me directly, unfortunately. Hopefully that answers Nicole's question. Good. Okay. Regarding the auto portion of it, most of you are now aware that we're writing all commercial auto policies moving forward on new business. And those are entered through our rating system called BizLink. And that again can be found in AgentLink. And this has prompted a lot of questions, and rightfully so, due to our exit from personal lines, where we're getting rid of the family car policies or the FC policies. There's a few different things that I'd like to go over somewhat high level. And again, if this prompts any questions, by all means reach out, because I know, again, this is a hot topic right now, and there is confusion stemming around some of these changes and what is or what isn't covered. The first thing that I want to touch upon is when rating a new policy, if you're going in there and listing each of the units, the class types, sedans truly classify as a private passenger or SUVs. Those two are what we list as our private passengers. if you have a Ford F-150, an F-250, an F-350, those can actually get classed as light or medium trucks, and there's a premium savings tied to that on the commercial auto. So there's a higher rate associated with the private passenger versus the light trucks, the medium, and the heavies, so on and so forth. And then you'll also notice that the more autos that you have on a commercial auto policy, the cheaper the rates get because of the fleet factor. So if you have anything above 3 autos, you'll start to see a price point break per automobile. And then it goes, usually it's like every 3 to 4 vehicles added thereafter, where it starts to show a price point break as well. So if I do see that where a quote is submitted and they might have an F-150 listed as a private passenger, I'll change that. But please don't let that deter you from writing an auto account with us, because we can apply credit on the commercial side too, which also often helps out. And then deductibles. We typically write at a minimum 500 for comp and collision now. We do have a lot of policies out there that might have 250 comp deductibles on there or collision. And you'll notice that there's altered terms letters going out on those to increase those to a minimum of 500. If there's loss frequency or severity tied to that, you might see $1,000 as a minimum being sent out via altered terms. And then in the attachments that I sent over too, you'll notice that there's the planting and harvesting endorsement, and then the seasonal use endorsement. The planting and harvesting endorsement is something that we can attach to our semi-trailers and our heavy trucks and extra heavy trucks and tractors. And that provides a deeper discount for those because they're used on a limited basis, truly during planting and harvesting. So limited times throughout the year. So there's built-in rate reductions tied to those vehicles. The seasonal use endorsement still offers a breakdown, a price point breakdown, but those are used maybe like the form says, typically 6 months out of the year, kind of as an arbitrary number to apply that discount there. So, if we see a policy that has they're classed as a dairy operation and they've got every truck and trailer with planting and harvesting, I might reach out and say, hey, how are they hauling your milk? That's probably done more frequently than somebody that's a grain farmer. So just something to be mindful of with the discounts there. But those are available. And then a question that often comes up now too with our commercial auto policies is the CA 9917 form versus DOC. So that's the individual named insured form. And when we write new business, we always include the CA 9917 if it's an individual named insured. So if you have John and Jane Smith, we would include the CA 9917 form on there. If it's an entity such as Grain Harvesters LLC, because it's a business name, that's where we include the DOC, the drive other car form. They provide very similar coverages, just it's depending upon the entity, the individual named insured type. And then one thing I want to point out with the DOC form, the drive other car, is that it covers the named insured and their spouse. If there's other resident relatives that live in the household, they each need to be listed individually under that form to extend coverage. It doesn't automatically include everyone in the household.
So just to bring this to kind of what all of you are probably dealing with. So the family car policy, we wrote a fair number of those. It was kind of more on the personal line side, which Secura exited, right? And they gave us a year on those family car policies because they were kind of associated with farms versus the milestone program, which is done now. And Secura's quoting those over to commercial auto for us. They're doing the quoting, converting those over, and they're going to include that C99A to make that what we would term a personal lines auto policy, act like a personal lines auto policy, even though it's on commercial auto, except if they have an entity. If it's written in an entity, then you got to go the other route. But just want to make sure everybody knows they're entering and quoting these for us. You should be receiving those. And I think there's some price considerations to try to make it somewhat competitive to where they were. in most cases, or cases that it can be done,
Yes.
right? Yeah.
Right. In most cases, and that goes back to the class types. So if you have a private passenger, say on the FC, you had just two private passenger autos. Once those are converted over to the commercial auto, those are unfortunately going to be rated much higher. It's just because they're not associated with the commercial auto policies like they are on the FC side. So you're going to see higher rates. Even after we do apply credit consideration, there are a lot of times they might be, significant. They could be 50, 60, up 100% increases. And, it's just unfortunate that we can't continue to write those because there are the other carriers out there that, the Progressives of the world that can write those for a much lower rate. One thing I wanted to point out with that is we will continue to offer the 10% home car discount for an additional year. So for that upcoming term, even if they write that policy elsewhere on the auto side, we'll continue to honor that home car discount for 1 year. And then it would be removed that following renewal then. But just something we're going to continue to do to help alleviate some of that burden of having to place that business elsewhere and no longer offer the package.
And if you do have to go elsewhere with a personal auto policy, Progressive, wherever, right? You'll lose the multi-car after the first year, which kind of staggers things out from a rate standpoint for the insured, which is good. But you'll also, as long as we got the proper limits, A-rated carrier, you write the farm, you'll still write the umbrella with that other auto carrier endorsed on the policy. So
we'll still extend our umbrella over. And we see that regularly. We'll see a lot of toys, the wreck vehicles, the boats and autos that are written with Progressive. And again, it's just as long as that underlying limit meets our minimum requirement of 500 or 500 CSL, we can extend our umbrella over. So one thing when writing the new business with us, it's imperative to, again, send over the loss runs so we have an idea of what to expect from a credit consideration standpoint. And then MVRs, any MVR information that you can obtain up front is going to drastically help with pricing. And then also with the umbrella piece of it, because we don't want to have a surprise scenario where all of a sudden we write a piece of new business and offer a $3 million umbrella and find out Mr. Insured's had 2 DUIs right after it goes out the door, and then we have to take action on the umbrella and the auto. So just great to be proactive and get that information as much as you can up front to help with that information as far as pricing. And then the only other thing that I would like to point out on the auto side is when we send out renewals, a lot of times you'll see that our CSR team will ask for updated driver's lists. Please do your best to have the insured provide us with even their seasonal employees. And again, that speaks to the umbrella side more so than the auto because of the MVR concerns there. We see, there could be DUIs, excess speeds, multiple violations that adversely impact an umbrella in addition to the auto. Just something to be mindful of, that we do want those seasonal employees listed on there. Are there any questions on the FC to CA conversions or auto policies in general? No? Go ahead.
So Ryan, a travel trailer, I know we can put those with Progressive, but if somebody wants that on secure commercial auto, I found, does it have to be like a special type, mobile home, travel trailer with living quarters? Is that how you want those scheduled?
It is, and I'm sure you've seen too that those are priced likely much more than you would see on a Progressive policy as well. Again, it boils down to whether or not somebody wants everything written with one carrier, or if they're okay saving some premium and going elsewhere for those coverages. Some people might prefer to have those separated out so one doesn't impact the other policy adversely in the event of a loss.
Yeah, if they wanted it, I just wanted to make sure we were quoting those correctly if that's what they wanted.
Mm-hmm. Nope, you're doing it correctly.
Thanks.
Good question. All right, looks like we have about 10 minutes left, so I'm going to touch upon umbrellas here lastly, and then we'll open up the floor for any questions as time permits. One thing I wanted to point out with new business, we're capping our umbrella limits at 5 million. We often get requests for 8 million, 10 million. And right now, the reason why we're doing this is our reinsurer is concerned, as are we as a carrier, about social inflation. That's become a huge topic in the industry, and it's caused us to put a halt on offering anything over 10 million, or excuse me, over 5 million. We used to offer up to 10 million as new business as warranted. And then regarding the actual umbrellas, I don't know how many of you are familiar with the rates. If you look on the deck pages of the umbrella on the very first page where it goes over the limits, you'll see they're an option A or an option C. And what that means is if there's any underlying exposure that has 500,000 or less, we rate that as an option A. Anything with $1 million is option C. So that umbrella, if it's option C, actually has better rates because the underlying is taking on more of that risk. So they give a price point break, if you will, on the umbrella side. And that's why we always ask for the underlying decks on those policies just to confirm, because everything with Secura might be 1 million, but then again, they might have a boat policy with Progressive that has 500. Well, that actually will drop that whole thing down to an option A from a pricing perspective. So something to be mindful of if you ever see that on there. That's what that means, or how it's broken down. And then regarding the actual umbrella too, if you're looking to write any heavy autos, extra heavy truck tractors, those have to be written for us, for our umbrella to extend over it. We can't write our umbrella and have it extend over any of those units if they are insured elsewhere. We want to make sure that we write that exposure directly with us so we know what exactly we have in-house. Then as touched upon earlier too, it's become more apparent that we need to closely monitor things like MVRs, loss history, just due to the social inflation aspect and the likelihood for umbrellas to be triggered with how litigious societies become. It's an unfortunate situation, but something that we all have to deal with. So if you do have an umbrella that has anything over a $5 million limit, we'll look at those and we can still offer those, continue to write at those levels. So if we do have a $10 million umbrella out there, we can still continue to renew the 10 million as long as the MVRs are good, loss history is good. If there's questions or concerns, we might have to reach out and say, we need to consider lowering this to 7 or 8 million. Again, that'll be determined upon the merits of the risk.
So just to clarify, Ryan, because we got all different levels here of insurance knowledge. Social inflation is kind of a term that's come out, in my opinion, probably since COVID or right after COVID, maybe somewhere in there where it's really in the news. It's in the news every day, in the insurance news. And really the definition of that is judgments beyond a reasonable economic factor that insurance companies would normally pay. It's runaway judgments in a court of law is really what's doing this. And it's a huge issue with every carrier. Every carrier is limiting umbrellas. It's difficult to place umbrellas. It's hard to get them in, even in the E&S markets for access, because everybody's terrified of this. If you just do a Google search, USAA, auto insurance, home insurance carrier, just had a massive one in the news this week. About $100,000 injury loss turned into $140 million against USAA. Guy has like 5 million limits on his umbrella. 140 million, most of it punitive damages and compensatory damages. So you can see why this is such a huge issue, and it's in the news every day. Just saw the airplane crash yesterday, not to dive into that, but the first lawsuits are already being filed a couple days later, and the judge, the asking, which if I went through that, I'd want a lot of money too if I walked away, right? So that was horrifying to be upside down in an airplane, but they're naming everybody. I mean, they're naming everybody in these lawsuits, even like Jack Daniels, because there's a bottle of Jack Daniels in the cart, that they serve passengers. I mean, it's just crazy. So, and they start weeding that out, but this is kind of why the umbrellas are such a challenge right now and why all the carriers are kind of limiting it. So
that's a really good point. And an unfortunate situation. And I mean, we all see it in our daily lives. Every time you turn on the television, you see the attorney commercials, you know, your insurance company is doing you wrong, and call us and we'll help you get millions. So that's just the world that we live in now. And,
It is.
but yeah, and to your point too there, Jim, you'll notice too that Secura, our actuaries have actually gone through our book on the umbrella side, and you'll see the rate increases with some of those layers, especially the higher layers of coverage. They were priced pretty favorably in the past, and upon renewal, no changes, you're going to start to see some rate increases. There's no set amount, if you will. That's all dictated upon units that we insure. So autos, acreage, homes, boats, all the toys, you know, so on and so forth. So just something to be mindful too, where all of a sudden you might see a modest bump in some of these umbrella renewals, especially with those higher limits, to be mindful of that. That's where that's coming from. So any other questions for me? Farm related, auto related, umbrella related, they're all fair game.
Now's your time. It's not often we get an underwriter here one-on-one where you can ask anything.
But no, if there are no questions, I would like to personally say thank you to everyone in the office. It's been a pleasure working with all of you, and I've gotten to know you all very well. And it's I look forward to working with some of the newer ones too. It's great working strictly with Farmers Union. I think just having one touch point, if you will, with Jim kind of overseeing everything as our liaison, it's been highly advantageous for both sides, and I think. It just helps speak to the success that both sides have had. So kudos to everyone, and appreciate all that you guys do. Kind of behind the scenes that often goes for granted, but you guys are really the cogs that make everything work. So kudos to all of you, and I appreciate all the work you put in.
Yeah, likewise.
Thank you, Ryan, for being with us. I really appreciate it. And just being here in Allie's office and speaking with Sharon, who works a lot with the farm here. She had just great things to say about Secura and Secura's systems. And we really appreciate the partnership. I think it's always mutually beneficial, right? Like
Absolutely.
And when that works out to be an advantageous relationship like we have with Secura, I think that it's just a winning combination. So thanks for your time. We really appreciate it. Jim, do you have any closing thoughts?
No,
Suggestions,
same as you.
kudos?
Secure is just terrific partner. It's because of people like Ryan, and probably the best part, I think he'd probably get a round of applause here, is he picks up the phone in a timely manner, or he calls you back in a timely manner. So, I mean, that's just such a huge win. You would think that's common sense, right? Like just easy to do business with, but it's amazing how many carriers can't figure that piece out. And in turn, it's why Secure is successful, for people like Ryan who return phone calls or pick up the phone when you call them. So we appreciate that very much. And appreciate everything everybody's doing. You're all on the front lines of all the changes, personal lines, farm, whatever. You know, you're the ones taking those phone calls, and why'd my rate go up, and why is this change, and what's this mean? And appreciate everything you guys do on behalf of your agents. I know you probably take the first round of beat up calls when those are happening. So we recognize that, and thank you.
And for this group here, I know that you're all pretty familiar with Jim and his wealth and depth of knowledge, but just always feel free if you are searching for an answer or you have a question that you just are not sure of, you're just not progressing or you're struggling. I know that Jim is always open to a text, a call, an email, and he also, speaking of Ryan, and they're having somewhat of the same brain, they must have, their personality must be aligned too, because Jim is very, very good about getting an answer back to you, picking up his phone, and being very reachable for all of you. And so please know that you always have a resource here at the state office with Jim, and any of us at the state office. We're here to help, farm lines or any other topic. So thank you, Ryan, thank you, Jim, and thank you everybody for taking an hour out of your day I hope that you got one little thing out of today. That's always my aim. Thank you to Sharon for offering up the suggestion for just a little bit more information about farm renewals, farm business. Next month, I do have a topic. We will have travelers on the line with us, and we're going to be talking about what we're contractually obligated to document in our agency management system. It will be so fun, they said, but I'll try to make it fun. And the travelers people are really super knowledgeable as well. So I think there'll be some good information. And there'll probably be an awesome giveaway like this week. I'm gonna let Sharon grab a name. Yep, and then we'll send the Stanley via mail to you. And it's Charlene from Agent Ben Karen's office. So Charlene, I'll give this to Ben next week at the statewide, and he'll bring it home to you to Bemidji. So thanks again, everybody. I hope you have a good rest of your day, and always remember, let's level up. See ya.